looking at 3 explosive penny stock opportunities that could transform your portfolio in 2026. And trust me, you'll want to hear every detail before these names hit mainstream radar. We're diving deep into companies that aren't just cheap stocks. They're undervalued businesses with real catalysts, actual revenue growth, and partnerships that could send their valuations soaring. Now, before we jump in, remember, this isn't financial advice. Always do your own research. But what I'm about to share are 3 companies trading under $5 that institutional money is starting to notice. So let's get straight into it. First up, we have Iveda Solutions, trading under the ticker IVDA, currently sitting around $3 per share. And this is a company that's positioned at the intersection of 2 massive growth markets: artificial intelligence and smart city infrastructure. Iveda specializes in AI-powered video surveillance and IoT solutions. And here's why this matters right now. Their most recent quarter showed revenue growth of over 40% year over year, bringing in approximately $2.1 million in Q3 2024. Now, I know what you're thinking, that's a small number, but here's the kicker. Their gross margins are sitting at around 65%, which means once they scale, profitability becomes exponentially easier. The company just announced a major collaboration with Taiwan's government for smart city projects, and they're expanding their AI search technology that can analyze video footage in real time. We're talking about technology that law enforcement, retail chains, and city municipalities desperately need. Their partnership with Utopic Software in Europe is opening doors to the EU market, where smart city spending is projected to hit over $200 billion by 2027. The financials show they are reducing their cash burn, they've strengthened their balance sheet through strategic financing, and their recurring revenue model from software subscriptions is starting to show serious traction. The smart city market is exploding globally, and Iveda is positioning itself as a key infrastructure provider. With a market cap under $60 million, even capturing a fraction of this market could mean multiple times return on current valuation. Moving to our second pick, TriSalus Life Sciences, ticker TLSI, trading around $1.50, and this one's a complete game changer in the oncology space. TriSalus has developed the Pressure-Enabled Drug Delivery System, or PEDD, which basically allows doctors to deliver chemotherapy directly to tumors with significantly higher concentrations than traditional methods, while minimizing systemic exposure. Their lead product, the TriNav infusion system, has already received FDA clearance for hepatic artery infusions, and they're in late-stage clinical trials for treating liver cancer and liver metastases. Here's what makes this exciting. Their Q3 2024 financials showed product revenue of approximately $1.3 million, up from virtually nothing the previous year, because they're just starting commercialization. They reported over 80 medical centers are now trained to use their system, and procedure volumes are growing quarter over quarter. The company recently announced a collaboration with major cancer centers, including some of the top NCI-designated institutions in the United States. Their intellectual property portfolio is robust, with over 40 patents covering their delivery technology, which creates a significant moat. The addressable market here is enormous. We're talking about liver cancer treatment market valued at over $3 billion annually in the US alone. And TriSalus's technology could potentially expand to other solid tumors. Their partnership strategy is focused on clinical validation and real-world evidence generation, and they're presenting data at major oncology conferences showing improved drug delivery and tumor response rates. The financial runway looks solid after their recent capital raise of approximately $25 million, giving them cash to execute through multiple clinical milestones. Yes, they're pre-profitable, which is typical for emerging biotech, but the revenue trajectory is pointing upward, and any positive clinical trial readouts or expanded FDA clearances could be major catalysts. With a market cap around $90 million, if their technology becomes standard of care in interventional oncology, we're looking at a multi-billion-dollar opportunity. And finally, our third opportunity is NRDY Inc, ticker NRDY, hovering around $1 per share, and this is the company behind Varsity Tutors, one of the largest online tutoring platforms in North America. Now, here's why NRDY is fascinating. They've completely restructured their business model over the past year, cutting costs aggressively while maintaining revenue. Their most recent quarter showed revenue of $41 million, and here's the important part. They've achieved positive adjusted EBITDA for the first time in company history. They've reduced operating expenses by over 30% year over year while growing their direct-to-consumer membership base. The edtech market took a beating post-pandemic, but NRDY survived and is now emerging leaner and more efficient. They're partnering with school districts and corporations for B2B solutions, which provides more stable recurring revenue than pure consumer plays. Their platform leverages AI for matching students with tutors and personalizing learning paths, and they're sitting on proprietary data from millions of tutoring sessions. The total addressable market for private tutoring in the US alone exceeds $15 billion annually, and online platforms are taking increasing share from a traditional in-person tutoring. Nerdy's brand recognition with Varsity Tutors gives them a significant advantage, and their technology platform is miles ahead of smaller competitors. Recent partnerships with educational publishers and school districts are diversifying their revenue streams away from pure consumer spending, which was volatile. The company has over $40 million in cash and no debt, giving them financial stability to execute their growth strategy. With a market cap around $130 million and now approaching profitability, any return to revenue growth could rapidly re-rate this stock. The setup here is a classic turnaround story. Brand name company, proven product, massive market, now with operational discipline and a clear path to sustained profitability. So there you have it. 3 penny stocks with real businesses, actual catalysts, and valuations that could multiply if execution continues. Iveda riding the smart city AI wave, TriSalus revolutionizing cancer treatment delivery, and Nerdy turning around a recognized edtech brand. Each one carries risk, absolutely, but each one also has specific near-term catalysts that could drive serious returns. Do your own deep dive. Check out their quarterly filings, watch for upcoming announcements, and as always, never invest more than you can afford to lose. If you found this valuable, hit that subscribe button because we're constantly hunting these hidden opportunities before they hit mainstream attention. Let's build wealth together in 2026.